A Random Walk Down Wall Street. Introduction: The Power of Passive Investing. Introduction to Malkiel's philosophy. Markets are efficient, and most investors cannot consistently outperform them. The concept of a random walk in stock prices, implying unpredictability. The importance of taking a long-term approach to investing. Chapter 1: The Nature of Random Walks. Historical overview of stock market performance and speculation. The rise of technical analysis and fundamental analysis as methods to predict stock movements. The efficient market hypothesis, EMH. Stock prices already reflect all available information. Random walk theory. Prices follow a random path, making it impossible to predict short-term movements. Chapter 2: The Concept of an Efficient Market. Detailed explanation of the efficient market hypothesis, EMH. Types of market efficiency: weak, semi-strong, and strong. How information is reflected in stock prices, and why active investing strategies cannot consistently beat the market. The role of institutional investors and the rational behavior of markets. Malkiel's strong advocacy for index funds as the best approach for most investors. Definition and explanation of index funds: low-cost, diversified investment vehicles that track a specific index, e.g. S&P 500. How index funds compare to actively managed funds in terms of cost and performance. Historical performance of index funds versus actively managed portfolios. The power of diversification and why trying to pick individual stocks is often futile. Chapter 4: The Battle of the Investment Philosophies. A deep dive into the two major schools of thought, active investing versus passive investing. Technical analysis, an examination of stock chart patterns, moving averages, and market sentiment. Malkiel argues these techniques fail in the long run. Fundamental analysis, analyzing company performance, earnings, growth, and industry trends to predict stock prices. Malkiel critiques its limitations. The efficient market hypothesis, EMH, as the reason why both strategies often fall short. Examples of investors and fund managers who have consistently underperformed the market. Introduction to behavioral finance and how emotions influence investing. Psychological biases that affect investors, overconfidence, loss aversion, herd behavior, and the tendency to chase hot stocks. Malkiel's discussion on how these biases lead to irrational behavior in the market. The implications of irrationality in financial markets. How a random walk fits into the framework of investor psychology. The critical role diversification plays in reducing risk. The difference between diversification and concentration in an investment portfolio. Malkiel's recommendation of owning a broad, global mix of asset classes, stocks, bonds, real estate, and international equities. The principle of non-correlation, why mixing asset classes can enhance portfolio stability. Chapter 7: How to Build a Portfolio. Malkiel's guidelines for creating a diversified portfolio. Asset allocation strategies for different risk profiles. Conservative, balanced, aggressive. The importance of rebalancing your portfolio to maintain desired risk levels. Examples of model portfolios with varying risk tolerance. The role of bonds in reducing volatility and providing income. Chapter 8: The Future of Investing and the Role of Financial Advisors. Malkiel's vision for the future of personal investing in an increasingly automated and passive world. The role of robo-advisors and how they can assist in portfolio management. Malkiel's thoughts on the evolving landscape of financial services and the rise of index investing. The importance of low fees and transparency in the investment industry. Why financial advisors may not add significant value for most investors, and why passive strategies are preferable. Chapter 9: Investment Strategies for the Long Term. Malkiel's practical advice for individual investors who wish to build wealth over time. Dollar cost averaging, DCA, investing a fixed amount regularly, regardless of market conditions, to reduce the impact of volatility. The power of compounding, why starting early and sticking with a long-term plan is crucial. How to stick with a strategy during market downturns, and why patience is key. Avoiding market timing traps and keeping emotions in check. Chapter 10: Alternative Investments and Market Bubbles. A look at alternative investments such as real estate, commodities, art, and cryptocurrencies. Malkiel's stance on speculative investments and market bubbles. Historical examples of market bubbles such as the dot-com bubble and the housing bubble. The danger of speculative frenzies and the importance of maintaining a disciplined investment approach. the potential value of real estate as part of a diversified portfolio, the importance of including international investments in a portfolio to capture global growth, Malkiel's views on investing in emerging markets and developed economies, the benefits and risks of international diversification, the role of currency fluctuations in international investing and strategies to mitigate risk. Embrace the Random Walk, a summary of the key lessons from the book. Malkiel's final thoughts on the future of investing. Why investors should trust the Random Walk and focus on long-term, low-cost strategies. The importance of staying disciplined, diversified, and patient in achieving financial goals. Appendix 1, Case Studies of Successful Investors. Detailed analysis of famous investors like Warren Buffett, Peter Lynch, and others, and how their strategies align with or contrast to Malkiel's advice. Appendix 2, Technical and Fundamental Analysis Tools. A deeper dive into the tools of technical analysis, charts, indicators, and fundamental analysis, ratios, earnings, discussed in the book. Appendix 3, Further Readings. Recommended books, articles, and studies for readers who want to explore investing concepts further. This outline provides a comprehensive, detailed structure for a 25,000-word summary of a random walk down Wall Street. The total word count would depend on the depth and examples used in each section. If you're planning to write or create a detailed version of this summary, you can follow this framework to ensure all important themes are covered.